Today on RoxomTV News, Bitcoin slides to 74,000 before rebounding, triggering hundreds of millions in liquidations and raising fresh questions about whether this is a healthy reset or something deeper. U.S.-led peace talks on Ukraine resume even as fighting continues, and both sides warn progress will be difficult. But first, tensions rise in the Middle East as Iran warns of regional conflict while signaling possible nuclear negotiations with the United States. All that and more coming up right now on today's show. Let's get into it. Hello and welcome to the start of another week here at RoxomTV News. I'm your host, Hank Hudson. Our first story this morning begins in the Middle East, where things are sitting in an uncomfortable space as leaders are talking about peace in public while reportedly preparing for conflict behind the scenes. You see, Iran is warning that any U.S. military strike could trigger a wider regional war. At the same time, Tehran has escalated tensions with Europe, calling EU armed forces terrorist groups in response to blacklisting Iran's Revolutionary Guard. Meanwhile, the United States has significantly increased its naval presence in the region, and President Trump has made clear that military options remain on the table if Iran refuses to curb its nuclear program. And yet both sides are still signaling cautious openness to renewed nuclear talks. Iran says sanctions relief must come first and wants U.S. forces to pull back. Now, all of this is unfolding as the country faces its deadliest unrest in decades, following a violent crackdown on nationwide protests that has reportedly killed thousands. President Trump and Iran officials say some execution of protesters have stopped, but analysts say there has been no stop in executions. Let's take a listen.
And we heard from President Trump maybe a little more than a week ago. He was saying that about 800 executions had been stopped. Iran was not going to execute those folks who were involved in the protests. Do we have any idea, because we are also seeing reports coming out of Iran that there may be some executions that are happening? Do we have kind of a clear understanding of whether or not Iran is conducting these executions?
We know for a fact that they are currently executing not only just criminals or people who are arrested of, let's say, drug-related crimes, they are executing political detainees. That has been going on. There has been no halt to that, period. I think it was this Wednesday that they executed someone on the sham charges of having, quote-unquote, been an Israeli spy. The week prior to that, again, there were a couple of political detainees that were executed. The week prior to that, also there was other examples. So this campaign hasn't stopped. There might be threats coming from Washington that might delay or postpone certain executions, but you're talking about a regime that's the highest executioner per capita. Without a doubt, they will continue these executions, and we know for a fact they do because they announce it. So this is a terrorizing tactic. The Islamic Republic does not hide its executions; it actually announces all of them. It's not just a matter of opinion. The judiciary declares all these executions, informing the public that this is your fate if you continue to protest. So they're very clear, and more importantly, they sent a very, very clear signal to Washington saying that no amount of pressure is going to get you regime change behavior. The regime is not going to change its behavior no matter how much pressure is on it. Executions, repression is ingrained in the Islamic Republic's DNA, and the only way to move past that is if we were to see regime collapse.
Now, that internal pressure is making diplomacy more fragile, not more flexible. And for audiences at home, this matters because when tensions like this stay unresolved, they don't fade quietly. They show up in higher fuel costs, shakier markets, and sudden global shocks. And moving on to China right now, China is having some major financial and manufacturing right now in China's major financial and manufacturing centers, investors are coming to terms with the fact that the country's once reliable metals market is going through one of its most painful resets in years. What began as a sharp and sudden drop in gold prices has now collided with a sprawling trading scandal, creating a double hit that is leaving traders, companies, and regulators scrambling to understand how much damage has really been done. According to Bloomberg, metals traders have already lost at least 1 billion yuan after the collapse of a trading network run by a dealer known in the industry as the Hat. Now, that nickname refers to Zhu Mahua, who built a complex web of copper and metals trades based on circular transactions and invoice financing that appeared stable for years. Now, for a long time, the system functioned smoothly enough that few questioned it. But once Zhu fled the country, the entire structure began to unravel almost immediately, exposing how dependent it had been on trust and informal arrangements. Lawsuits quickly followed, including major claims against state-linked firms. A Chinese court froze more than 3,000 tons of copper, and regulators launched broad investigations into how widespread the irregular trading may have been. At the same time, ordinary investors are being hit by violent reversals in precious metal prices themselves. After Kevin Warsh's Fed chair nomination strengthened the U.S. dollar, gold and silver suddenly became far less attractive to global investors. Gold fell by as much as 10%, while silver dropped up to 16%. And many leverage traders were forced out of positions in a matter of days. One investor told Bloomberg she lost more than 80% of her savings almost overnight. Even professional hedge funds were caught off guard as trend-following models failed to adjust quickly enough. Banks are now tightening rules on retail gold products, raising minimum deposits and limiting access to curb speculation. Joining me this morning to talk about this and others, we have the man with the biggest beats in all of the land, Mr. Steven Orr. Steven, happy Monday. Thanks for joining us. Great to see you. How are you?
Thanks, Hank. Yeah, it's kind of an interesting situation here with the metals markets going on. But, you know, we've always seen this throughout history. Greed always catches people. Madoff, you know, you can name them on my own single hand right here. But, you know, when you look at the Hat himself or the whale trader in London, they all have one thing in common. They have a great plan until it doesn't work anymore, right? And then out the door it goes.
Yeah.
So in this situation here, he had the circular trade. He's selling one to another person and another person. It's triangulation. It's one of the oldest scams in the book. And we've seen it forever and ever. Why did this not get caught in 2026 until now? Well, because of China, and it's literally a part of the government. They're trading metals part of the government. So that needed to be separated out, and I think that will. I think Xi Jinping has probably got a little bit of egg on his face based on this one, and I don't think that this piece right here will be part of the China government anymore. I think they'll actually break it out. He actually owed money to shipments of actual copper and other metals. It wasn't just gold, but we kind of find out it was a massive ring here of lots of different metals, and that really hurt SDLC commodities.
Yeah, and a lot of regular investors were feeling the pain here as well, especially in the gold and silver arena's big beat. So my question to you is, does this change how safe people should think traditional assets really are when we just saw gold and silver get nuked over the weekend?
Well, you look at this specific situation with the Hat, and honestly, it was only $144 million. So it wasn't a large situation. It was large to China, and it's something new to China. But when you look at the overall metals market, this probably didn't even move the needle that much. Some traders are saying, yeah, they lost it. But the FOMO that was hitting silver and gold and pushing, was nonsense. I actually shorted, as most people know. I shorted silver at 120 and 118, and I'm actually long now. So no, I'm not worried about this situation here in China about the metals market overall, right? I think what's happened is that the gold and silver ratio was way out of whack, and today now it's the other way around. The problem is FOMO in general, right? It's getting people excited, and when things do get out of whack, you have situations like this, and as Warren Buffett always says, when the tide rolls out, you get to see who's swimming naked. So in this case, we're going to see Mr. Hat swimming naked, and now all of a sudden, now he's no longer in China. He left country, right? So that's what usually happens.
Yeah, and this last year, Big Beat, we've seen people flocking into gold and silver, these safe haven assets. Now we've seen them take a big hit that usually people are accustomed to seeing in the cryptocurrency market, big moves in a short amount of time. Do you think that's going to reframe how people are thinking about gold, silver, and Bitcoining as we move into 2026? Is that going to change anything at all, do you think, for the common investor out there?
No, because the narrative is still the same. I mean, there is a supply and demand issue here. The demand is higher than it had been. Supply is still the same. We've not, as my friend Peter Thomas would always say, we've not had a new silver mine come onto production. We know that two places in the world, Peru and Mexico, are one of the two biggest producers of silver. We know that China is now closing down their borders when it comes to those rare earths and metals, but the president says, "Oh, we're going to have more rare earths than ever had." It doesn't matter what people say. It's the amount. Can we dig it up out of the ground? Can we produce it? Can we create this new flow? And the answer is probably not. It takes time, and it's still the same producing countries, and it's still the same types of machines that produce it. So they are limited by the amount. There might be some new mines, but we have to go explore them. We got to go find them, and that's not a new thing. So right now, no, the supply is constrained. Yes, the demand's pushing up. So we know by college professor economics, S1 plus S2, D1, D2, that, yeah, we're going to see higher prices. But we've already seen them. The difference was the speed at which it happened now. And what happened was the liquidity was very thin, and it caught some people off guard. And when it did that, silver ran to 121.67 an ounce. And that was just asinine. It should not have happened. And it did because of outsized positioning by zero DTEs, by futures contracts, margins, all those things that we've been talking about is positioning of your portfolio. You shouldn't be able to do, but we do allow that, and education will help you understand that. Now, here we are at $80 an ounce on silver. I think we're at $78, $79 an ounce on silver. And when you look at that, is that even normal? And I think that we're getting back to normal, yes. Because I think in this case, you have to look at the gold to silver ratio, and that gets back to a little bit closer back to normal. So, yeah.
Yeah. And what was another interesting part about this particular story, Steven, is that China has always kind of been seen as this pillar of global commodities. So my question is, does news like this kind of shake that reputation in your mind at all? Or is it more of a temporary stumble? Where are you landing on this one?
No, because I don't trust China data anyway. I mean, China's making the numbers up pretty much. They make up about everything else. And not to say anything bad about the country, because I love China, but the truth is that, we have to be able to trust the numbers. And right now, I don't trust the numbers of pretty much anything coming out of China right now. And that will really calm the markets down if we have real production numbers, real understanding of it. But right now, I don't think those numbers are real. I don't think they're right. And we're definitely not seeing numbers that equate to $5,000 an ounce in China. There's a definite arbitrage situation, if you can handle that, between what the price in Shanghai is and the price here in the United States. Buy it in the United States and sell in China. If you could do that, we can't. But if you can, it's a massive arbitrage. They really wanted the gold there. But we don't want to let the gold out of the country. We don't want the gold out of anywhere. So, no, I understand it. So when people say, "Oh, well, we're buying it silver because the price of silver is higher in China," well, that's great because that's where China is at. Why? Because the dollar is higher. It's going back up. I think the Dixie's now back to 98. So, yeah, I know. I think that the pricing is starting to come into fruition. But I am a long silver here. I think we get back to about $90 an ounce, somewhere around there.
Okay. All right. So still some upside to be seen in those precious metals, and we'll see how this all kind of settles down after what was ultimately a pretty turbulent weekend over on that side of things. And I want to move to more news in the markets to our next story here, Steven, as in the past few weeks, investors have been paying unusually close attention to what is happening right now in Washington. And recently, after a stretch of nervous market behavior, many of them finally felt comfortable taking a breath. You see, President Trump's nomination of Kevin Warsh to lead the Federal Reserve has eased growing fears that politics might begin to interfere too heavily with monetary policy. For much of this year, investors had worried that pressure from the White House could weaken the Fed's independence. That concern helped fuel talk of a potential Sell America trade. Or in simple terms, that meant stocks, bonds, and the dollar all falling together, which is usually a warning sign that confidence is slipping. Following Warsh's nomination, those fears began to cool. The dollar strengthened, U.S. markets steadied, and volatility started to settle down. Now, Warsh is widely known as someone who takes inflation seriously and values institutional stability. Even though he has supported interest rate cuts when economic conditions called for them, traders believe he will ultimately prioritize long-term credibility over short-term political goals. Now, that balance is especially important for large foreign funds that invest billions of dollars in U.S. assets. Earlier this year, rising tariffs and fiscal uncertainty pushed some investors towards safer alternatives. A few quietly reduced exposure to American markets. Now, Warsh's expected policy direction, which includes a smaller Fed balance sheet and lighter regulation, has been welcomed by much of Wall Street. Gary Cohen, the vice chairman of IBM, told CBS Face the Nation that Walsh will take the Fed back to its traditional norms. Here's more on what he had to say.
So look, I think we're very fortunate to have Kevin to be the nominee. Kevin has a unique background coming in as the chair. As you said, he was a member of the Fed board before. He was there during the 2008 financial crisis. He was instrumental in that crisis. What I mean by that is when banks were going through stress and we saw a lot of bank mergers, we saw a lot of assets being moved around the system, Kevin was the point person at the Fed. He was involved in every one of those discussions. And I truly believe without Kevin's expertise and without Kevin being there, we would not have come out of the 2008 crisis as well as we have. So he's very highly qualified. He's going to take the Fed back to its traditional sort of norms. I think Kevin's going to stay out of a lot of the non-financial issues. He's going to be involved, obviously, in setting interest rate policy. There is a pressure right now for interest rates to go lower. I think that he will probably follow through on the 1 to 2 cuts this year. Kevin also has a view that the Fed should not have the large balance sheet. The Fed went in and bought an enormous amount of securities. I think that Kevin will reverse that. I think he will be looking for the Fed to sell down their balance sheet. And on the regulatory front, I think Kevin is a traditionalist, believing that we need strong regulation in the United States, but it has to be regulation that works and allows the market to grow and allows the consumer to have access to capital. So I think he is actually the completely right choice in this period of time. And on Friday, when his nomination came out, the market spoke. Yeah. And I think you have to look at what the markets tell you because they're real-time feedback indicators.
Right. Now, for those of you watching at home, this story matters because the Federal Reserve influences everything from mortgage rates to credit cards to retirement savings. It also affects how confident foreign investors feel about keeping their money in the United States economy. We're bringing Steven back. Steven, when you saw the markets calm down after Kevin Warsh was nominated, did that surprise you at all, or did it make sense based on how investors think? What was your initial thought on him being nominated by Trump?
I have been very critical of the Fed over the last few years, but the speed of what I felt needed to happen. In other words, cutting rates a little faster than they had, staying on top of data. One of the complaints that I've had about the Fed is that the governors have been very academic, not in the actual working at companies on Wall Street. To have a professorship, shall we say, very academic approach to how the Fed has acted. Kevin Warsh, being one of the youngest, was the youngest when he was appointed by Bush, understood the Fed from the inner workings of it. He understood the Fed and how it actually works. Unbelievable. And he also has a foothold in Wall Street. And he has also Harvard Law and Stanford Law, bachelor's degrees in public policy. Like, he understands government, and he was a Morgan Stanley academic as well, and a Hoover Institution fellow. The guy has got the accolades and the pedigree that we need to have there. And I love this pick. This is a great pick. And then when I looked at Kevin Hassett and the Kevins, shall we say, when Trump was talking about them, he had 4 people that he was looking at. And when Trump said, hey, the guy I'm going to pick is in this room, and it wasn't in the room, told me a lot, right? That he was trial ballooning who he thought the Fed governor and Fed, in this case, chair would be, and could it be somebody that Wall Street respected? And in this case, very much so. I really like this pick. It was a pick that I thought he should pick at the beginning. It's a pick that I thought he would pick at the beginning. I wasn't sure what in the middle of some of this. But when he became a distinguished fellow at Stanford at the Hoover Institution and became a lecturer, a lot of those things that he was talking about spooked Wall Street a little bit, right? It was a question mark around the speed of which he would cut the rates. Will he cut the rates? Now, in the last vote, it was 10-2 and not in favor of a cut to keeping the rates the same. Now, if he comes on board, it's 9-3. So he's still got a few arms to wrangle and some headlocks to put in to make those cuts permanent or to bring the cuts down. You just heard Fed's boss to just say, I didn't think we're going to have any Fed cuts in 2026. Market just rejected that thought process. So Kevin Warsh has his work cut out for him, but he's also well respected at the Fed. So Trump did not. Trump is the one who picked Powell, not once but twice. So when I look at it from this perspective, he's been there. He's an academic. He's also been on Wall Street, and he's also married to Jane Lauder, Estee Lauder exec. So look, he understands the marketing side. He understands the business side of this. He understands Wall Street side, and he understands the academic side. This is a well-rounded, very good pick, and that's why you saw Wall Street respond to that and the nonsense of metals moving around because we don't know. Let's go hoard gold, go get as much gold as we can put it in the ground in our house. That's just nonsense. As I call it, the gun case metal. That was nonsense. So, and I like the Kevin Warsh pick here. I think it's gonna be good. Now the next question is, can he get past the Senate? Can he get past congressional approval? And that's going to be a bigger question. I think the answer is yes. Yes, there are a few Republicans that are going, they're thumbing the nose at the pick. I think it's wrong. He should be picked and he should also be passed because it is what the president wants. It is his pick. Can they sell to Congress? Yes. But will he be able to sell this when he becomes the chair? Can he also sell this to the other members? It is a heavy lift. Kevin's got the background, the pedigree. I think some things are going to get moving along right here. I like this.
Yeah, I'd love to hear it. I think you've probably assuaged a lot of people's initial fears with this nomination. People don't really know what to assume, but it sounds like he certainly has the pedigree and the credibility to man the post. And this comes at a time, that we've been hearing about this Sell America trade. So, Big Beat, in simple terms, how serious was that risk before Warsh's nomination came out?
The Sell American narrative started picking up steam in Europe. It also picked up a little bit in the Asian countries. And yeah, they own a lot of our debt. So it didn't scare me because with the United States, we have quadrillions of dollars. And unless oil goes away, no, the dollar is going to still be strong. What they were selling was American treasuries, our U.S. treasuries. And that did happen. But did it really affect the markets? No. Dow's right now at 49,300, Nasdaq's at almost 24,000. No, that didn't hurt the markets there. Did it hurt the markets when it came to crypto? No. Yeah, a little bit, but it's an international asset class. There were different factors there. I wasn't afraid of Sell America unless it had picked up even more, and it didn't, and that's already gone away. The narratives in the markets are coming and going so fast. People it's noise in a lot of ways. So no, I wasn't too worried about this one.
I think there is a lot of people who are asking the same question out there right now, Steven. It's if Warsh does move toward tighter policy and a smaller balance sheet, how do you see that playing out for stocks, crypto, and risk assets over the next couple of years? Where do you see this heading with him if he is in fact appointed as the new Fed chair?
Well, I think one of the things the president has put on the agenda is making housing more affordable. He wants to make sure that everybody can get afford a house, and that some these major companies the banks don't take over single homes so that people can't afford to buy them. He wants people to be able to buy them, and so rates have to come down in order to be able to buy these houses. We had an issue during COVID where everybody that wanted to buy a house got a house, right? Rates came way down, and that's happening. It's been here we are 5 years later, and nobody wants to leave their house because rates were very low then, and their house prices have gone up. But is it enough to be able to take out another mortgage? The answer is no. So there's this whole thing about can the next level of housing happen? Warsh is going to have to lower some rates because it is becoming a housing buyer's market. Now, in order for the government to really pump the let's say the big churn in business, banks need to have money in that. And in order to do that, then banks need to have a higher rate so that they can charge, and it becomes a flow. And that flow is a little bit hampered right now. And I don't think Trump is happy about that. So lowering rates makes it easier for new companies to start up. It makes it easier to go to the quote commercial market to get money. And that's not happening either. Banks are hoarding cash too. So there's a little bit of uncertainty right here about this, and Warsh helps bring a little bit more calmness to that. But when it comes to lower rates, it's going to have to come fast, and we don't want it too fast, because if it comes too fast, there's a problem in the markets. So it's a kind of a catch-22 going on right now. But right now, I'm not too worried about it. South America is nonsense. Lowering rates should happen. Bostic, I don't know what he's thinking right now. But I do think that when you look at the next 6 months, I think Trump is looking at the election, and he's looking for issues that will help him get elected, or the Republicans in Congress. That's one of the issues, right? Is availability and home improvements. New kitchen, your new bathroom, your new whatever. And those home improvements are also needed lower rates to borrow so they can make those home improvements if they don't get the new home. So there's a lot of things happening, and I think that people are waiting to see what's happening come say June, July, and August. The next because I don't think the next Fed meeting is going to have. It's not going to be let's cut rates again, because you already saw that. So now what? Right. So I think it's going to be summertime before we actually see rates being cut again.
Yeah, I mean, I know that would be music to a lot of people's ears, and this Warsh nomination was also music to a lot of people in the crypto, specifically in the Bitcoin industry, as I know I don't want to go out as far as saying he is pro-Bitcoin, but he has certainly in the past been open to it. So do you see this as a plus for the crypto and Bitcoin market as a whole, this Kevin Warsh appointment?
Well, he owns $750,000 worth of Bitcoin and crypto himself. So, I would think that he was. And he's been a proponent of crypto as well. But when, in the private sector at Coupang and UPS, they have looked at ways for blockchain. So he has been a part of that too. But he does advocate for a focus for traditional monetary policies. So there is a little bit of question mark. He is very pro-dollar, and you're seeing the dollar push back up. So sell America out the door again. He is. But is he as pro-crypto as J.D. Vance and Trump? Nope. Is he as pro-crypto as Scott Bessent? Nope. So there is a little bit of a balance, which is okay, because the Federal Reserve is not a U.S. government institution. It is a quasi-government institution, but it's run by the banks. And the banks don't like crypto. We saw that several times at Clarity Act. You're hearing it from Brian Armstrong, and you've heard it from several banks themselves. So, JP Morgan and Goldman Sachs have turned the tide a little bit and changed the tune. But no, I don't think Kevin Warsh is going to go into the Fed going, ooh, look here, wave the orange flag going, I can't wait for crypto. That's not going to happen. It's unfortunate. I wish he would, but I don't think it's going to happen.
All right, but it sounds like a favorable outlook in the future, so we're excited for it. We'll be seeing what that happens. Again, he does have to get officially appointed. It's only a nomination as of yet, but I'm curious to see how this plays out. I'll be really curious to see what eventual nickname Donald gives him, but I guess we'll have to wait at least 6 months till he gets a pet name of his own. All right, we're going to move on to our next story here that's happening on the other side of the world in southern India, where changes made quietly in government offices are now beginning to reshape how some of the world's most popular devices are built. India has recently taken one of its most aggressive steps yet to attract global technology manufacturing, and Apple stands to benefit more than almost anyone else. In its latest budget, the government removed long-standing tax risks and cut import tariffs that had made large-scale production more expensive and unpredictable. For years, Apple faced uncertainty over whether paying for advanced factory equipment could expose it to profit taxes. That risk forced suppliers like Foxconn and Tata to cover most of the costs themselves. Now, under the new rules, foreign companies can now finance machinery inside bonded zones for up to 5 years without triggering tax liabilities. That single change gives Apple far greater flexibility when planning long-term expansion. Now, industry experts say it removes one of the biggest psychological and financial barriers to investment. And at the same time, India reduced duties on electronics components, battery materials, and other critical inputs. The goal here is to lower production costs and reduce dependence on Chinese supply chains. Government officials say these reforms are meant to help exporters compete globally and strengthen domestic manufacturing. And with tax uncertainty reduced and import costs falling, Apple's suppliers are now expected to accelerate spending on advanced production lines. The exemption runs through the 2031 tax year and applies mainly to export-focused zones. And that aligns closely with Apple's global strategy of building multiple production centers. You see, currently India produces about a quarter of the world's iPhones, while China remains the dominant manufacturing base. But political tensions and rising costs there continue to worry executives. And for viewers at home, this should matter to you because supply chain shifts affect everything from device prices to product availability to how quickly new models reach stores. It also shows how governments can influence where major companies choose to invest. India is betting that smarter policy will turn it into a long-term manufacturing hub. Apple is betting that diversification will protect it from future disruptions. And right now, both sides appear committed to making that partnership work. We're bringing Steven back. Steven, when you hear that India is making it easier and cheaper for companies like Apple to build their long-term, what's your first reaction? Does this feel like a real turning point or more like another experiment that could still fall apart? Where do you land on it?
You know, Apple is a $3.9 trillion company. It's the largest company in the world. Do you think that India wants Apple in their country working and manufacturing? Of course they do, right? And the US dollar is at an all-time high against the rupee. So obviously, this is a win-win-win situation for India, right? So why not lower those taxes? Why not change those rules for favorable to bring countries? But in the United States, Trump says he wants to be a manufacturing company or country. So why not keep Apple here producing it here? Because it's more expensive to do it here. It's not hard to understand that. And we know that we have pricing power with our dollar in India. And we know that technology and they have the area to do this. China being the Shenzhen province and Chandigarh being in India. So all of a sudden you're looking at countries that are trying to win the favor in the hearts of Apple, Tim Cook. And they got that. And so in order to do that, you got to change those tax rules to make it happen. Hey, you want me here? Make it cheaper for me to be here. I've got the dollar. Now I need the taxes. So yeah, I think this is definitely going to boost Apple's manufacturing. And Tim Cook knows this because guess what? Apple's phone, the new 17 Pro Max, was the number one selling phone, the number one selling product that they have now. It sold so well. He was shocked by how much it sold. In fact, they had problems at the beginning. I know, I got one. And when you look at that, he goes, I got to make more. So where can I do it? And it's India, it's in China, already producing it. So they're going to win. I like this move on India's part. It doesn't forebode very well for the president's manufacturing mantra here, but it is working for them. And if I showed a chart of the rupee against the dollar, we're at 91.25. If I just look back to 2011, it's at 44. Hopefully I can do that, Victor. If you can let me pull up my chart here, I can show you my rupee against the dollar here, and you can see. Hopefully, if we can do that here, we can pull up a big, long chart.
Get it up.
That's okay. Take your time.
There we go.
All right. And I'm drawing that line. This is 2009, when manufacturing really started to take off in India. And there we are at 91.54. 3 times. The dollar is 3 times stronger than it was just 15 years ago. So manufacturing in the United States has come down. We know that. And we know where it's gone to. It's gone to China and India, quote, quote, the BRICS. And we know what's happening there. So they're going to give you very favorable tax status there. And I would be very, very fortunate to understand this. But if I were other companies in technology, moving to India is probably going to get smarter. So you're going to see a pickup, and I think you're going to see the dollar move against the rupee probably into the hundreds.
Wow.
That would change a lot of things over there.
Yeah, I mean, there seems to be a lot of changing over there. I mean, Apple has spent decades building manufacturing infrastructure around China, and now it's clearly trying to spread out that risk. So, Steven, do you see this as just smart diversification, or is it maybe a sign that companies are genuinely worried about geopolitical blowups right now? Because we are in kind of a tentative place in the world's geopolitical matrix. What feeling does this give you?
Yeah, geopolitics doesn't just affect us here in the States, it affects us everywhere. That's what I always say. When something happens overseas, it affects us. Why does it affect us? And you're seeing that. And I'm going to tell you, if India does this and they see that Apple's, increasing manufacturing, you don't think the other countries over there that do manufacturing for Apple, like China, is going to lower their taxes, and then all of a sudden you have a domino effect. So yeah, I do think this is going to be, and it helps lower the price of Apple phones. People said all the time, "Oh, we need to manufacture Apple phones here." Are you willing to spend $10,000 for a phone? You're already seeing that just in the past 10 years that our dollar is 3 times stronger in India. And when you look at rare earths and metals, guess what? They come from China and India. So it's cheaper to move the things around too as well. So that also becomes a question mark. So yeah, this is a very, very good thing for Apple. And then expect Taiwan Semi, expect massive companies like NVIDIA. This is a very interesting play here for them.
Yeah, and if you zoom out here, Big B, long term, do you think moves like this strengthen the companies like Apple more than they strengthen the countries like India? Or is this one of those rare cases where both sides are actually winning?
It's a rare case when both sides are winning because obviously geopolitically this could really easily change. We know that in the previous Modi administration that it took a more of a hardliner stance business than this one does. But when you think about India in the future, India loves the United States. We're paying all their bills over there, right? So no, I think the geopolitical issue is a question mark. Tim Cook is very on the forefront. He kissed the Trump ring and increased manufacturing. We know that too as well in the States. So yeah, I think that this could be very big for Apple, and it could boost their profits and margins as well.
All right, well, the rare win-win, I'll take it in today's world. And we're going to take a quick break here, Biggie B. But when we're back, you and I are going to be talking about our top Bitcoin story of the day and why Bitcoin's recent crash to 74K could be a good thing. All that and more coming your way when we're back right here at RoxomTV News. Welcome back to RoxomTV News. It's time for our Bitcoin story of the hour. And this comes with Bitcoin's price currently sitting at $78,000 this morning after recently sliding to around $74,000 over the weekend. And it happened fast enough to rattle even experienced investors who thought they had seen everything before. You see, over 4 days, prices fell nearly 13%, marking the lowest level since last spring. It was a perfect storm of thin weekend liquidity, technical breakdowns, and shifting macro expectations. When trading volumes drop on weekends, small moves tend to turn into exaggerated swings. So who was actually selling during the drop? The evidence points to forced selling from leveraged traders and institutions reducing exposure. Nearly $600 million in bullish bets were liquidated in about 24 hours. Adding to the pressure, U.S. spot Bitcoin ETFs saw more than $800 million in net outflows in a single day. That weekend buying demand right when the market needed it most. On-chain data shows more than 22% of circulating Bitcoin supply is now held at a loss. But that level of stress has historically set up the stage for sharp relief rallies. Tom Lee from BitMine told CNBC that crypto will now go parabolic. Let's take a listen.
Are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now, and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.
Now, for those of you watching at home, this matters because it shows how quickly modern markets can shift from calm to chaos. It also highlights why leverage and timing still matter, even in long-term bull cycles. We're bringing Steven back. Steven, when Bitcoin drops 13% in a few days and rattles even veteran investors, what's your gut reaction? Is this a panic moment, a healthy reset, or something more concerning? What's your thoughts on what's happening here?
Bitcoin's dead. Bitcoin's dead. Bitcoin's dead. How many times have we heard that nonsense? Look, when I look at the markets, it's the old adage, when in doubt, scroll out. You hear a lot of times that, they're over levered. They're buying. And can Michael Saylor hold the markets up? Well, you're seeing right now that the OGs are selling a little bit. Okay. We've always wanted that. I need more adoption. I want to see us using it in the local stores in Walmart. I want to buy things in Bitcoin, and that's always been the key to this. But if Bitcoin is held by a few people, if Ethereum is held by a few banks, then that's not a mass adoption. That's hoarding, and we don't want to see that. We want to see good policy out of the White House. Clarity Act is coming, and that's going to help institutions feel better. Yes, I think Brian Armstrong's right. I think banks are trying to slow it down, but I'm not scared about this. Why is it that when prices come back down, that the asset class of Bitcoin is where everybody gets scared? I love it when price comes back down because I can afford and buy more of it. I'm not scared. Neither is Michael Saylor. He's telling you I'm buying more of it. Listen to him. Yes, I get it. Tom Lee, $6 billion under water, but he told you something. He said, look, I didn't buy this on leverage. I bought it with cash. So because he bought it with cash means he doesn't have any debt. So I'm not worried about Tom Lee. He's telling you what's happening. Don't go lever up. Don't 100x your positions because you're going to get levered out. Why? Because that's the whole point of Bitcoin. We know exactly where on the ledger you are. We know where the positions are. We know where the orders are. We know where the liquidity is. And that's what's happening right now. I'm going to pull up my charts on Bitcoin here. And hopefully Victor's out there listening and pull it up. And we can show you what I'm looking at. There it is. And let me just pull back to 2023. This is January of 2023 when, Bitcoin was dead at 15,000. Remember when Bitcoin was dead at 15,000? I remember when Bitcoin was dead at, yes, right here, folks. This is 2024. This is March 18th of 2024 when we all got nervous. Oh, is it because of tax season? Are we selling for tax reasons because March and April? Well, nope. Guess it's not dead because guess what? Back in the summer of that year, we ran up from 53,000 to 108,000. Bitcoin's dead again. Right back to where? 76,000. Nope, Bitcoin's dead. Nope, we ran up again and went to 126,000. Bitcoin's dead again, and then now we pulled back. Now we're outside of the lines of what I would thought would be normal pullbacks, and that's because people were so levered up. But guess what? That resistance in 2024 in July became support in April of 2025 and is now becoming support here in 2026, of January 2026. And when Tom Lee tells you that it's going to go parabolic, what he means is exactly this. If we look at this timeline and we look at Elliott Wave, we should be right into it. And we should run right back up. And we see in the turn now. We're seeing it in MACD, we're seeing it RSI support, and we're seeing the technical analysis. And we're now hearing in the news that people are starting to buy up Bitcoin. And with Kevin Warsh being a little bit better about crypto than, say, Powell, an administration who is very favorable to crypto, then you're getting a trifecta again. And yes, Tom Lee is right. He's not going to stop buying it. So there you go. And I like this, and I love it, and I think this is right. And I had not been buying Bitcoin, but I've been buying Chainlink for the same freaking reason. Look at this.
Okay.
And you're seeing it. Why? Because adoption at Wall Street. It's gotten outside of the lines that I like, and I like that. When I see that blue light special at Kmart going on sale, I'm loving it right now. It's time to buy Link. So I've been buying it, and it's selling off. Fantastic. I'm buying more. This is what I like about Bitcoin. This is what I like about crypto, because they're starting to see this. And of course, many of people have been asking about silver. Well, it pulled back. It went too far. Why? Because people were over levered again. Same situation. If I pull up a 3-hour chart, why? That's what Wall Street likes. Well, there you go. You're starting to see where that support happened. Support now becomes, or resistance becomes support. And there you go. You're seeing it right here. I'll draw the line for you. And right here is the line. So I'm liking this a lot. You're starting to see support here. So this is what I'm saying. I love this. This is great. And the lines are telling you that we have support now here. So the money that's with the silver, it came out of silver, back into Bitcoin. Now the markets are starting to see this a little bit, and I like this. The narratives haven't changed. Adoption of Bitcoin, the scarcity of Bitcoin, the scarcity of crypto in general, and charting analysis, and the actual news is now beginning to understand why we're doing this. So all these things make me happy, and I'm going to go long again on Bitcoin and Link here.
Yeah, no, I think there's a lot to be happy about for those like that are in the know, yourselves, the Tom Lees, me to a lesser extent. But there's a lot of, common casual traders out there that saw hundreds of millions in liquidations and ETF outflows in just the last couple of days. So my question for you, Big Beat, is do you think that this most recent flash crash outflow that we saw kind of shook investor confidence at all, or is it just kind of flushing out some of the weak and over-leveraged hands right now?
Over leveraged hands for obvious reasons. But I'll tell you this much. If you like Bitcoin, own Bitcoin. Don't own the ETF. I mean, don't go levering up. Don't go tripling Xing and ultra ETFs and 100X. And you're going to get burnt. Why? Because Wall Street is part of the game now, and they know where your liquidity is. They know where your orders are. And if you're playing with Robinhood or if you're not paying for your trades, you're the product. So they know exactly where your orders are because they're selling their order flow to them. So no, I think if you want to own Bitcoin, own Bitcoin. Get an account and buy Bitcoin. That's all there is to say about that.
Yeah, no, absolutely. And for those that are looking to get into the market right now, especially now while the price is down, we have a lot of investors out there that are looking at what signals they should be paying attention to decide whether this is a temporary correction or the start of maybe something bigger. You have your amazing platform, Quasar Markets, Big Beat. Really quick, how do you use that platform to break down the information that's out there and make the best decisions for you about what you should be looking at next in terms of investments? I know you guys really allow the small fish to play with the big boys with your utilization of AI. Can you really break that down for us really quick? We'd love to learn how you guys do that.
Yeah, thanks for asking, Hank. QuasarMarkets.com, and we make it very simple for you, right? When you're looking at the software and you're looking at the platform, it's about bringing everything into it. News, technical analysis, shows like RoxomTV that are in it, right? To make sure you have a better picture and understand the world as we see it today, and kind of filter that noise out and let people see exactly what's happening. I knew about silver long before it happened. I knew it was outsized buying of levering up for no reason. And guess what? It's back to normal. Here we are again. Bitcoin dropped off. You think that the OGs want to see Bitcoin fall apart? No. You think Michael Saylor wants to see this? What do you think Michael Saylor's going to do? What he did, he bought more Bitcoin. What's Tom Lee saying? I already own it. I'm buying more. So when I look at that picture of the news, I look at the picture of the technical analysis we just saw, and we look at the theory behind it and the adoption of Bitcoin, it's not going to sit at 78,000. It's going to what Tom Lee says, $250,000. I think we'll go to $1 million. But the timeline, my crystal ball still broke, so I have to have my software pieces to help me out. But we're going there. And when you look at $1 million for Bitcoin, are you going to be like, oh, well, guess what? I bought it at 78 to 80. Or are you going to go, well, I really wasn't sure. I bought it at 100. They're not going to care because you still own it. One Bitcoin is still one Bitcoin. It won't matter when the fiat world falls apart. And it is falling apart. We're always worried about the dollar every 5 minutes over what the Dixie's doing. And you just saw some of the biggest moves in the dollar. Sell American narrative we just talked about, which I thought was nonsense, but it did affect the markets. And so when you see that, no, guess what it didn't really affect? Bitcoin, because Bitcoin doesn't care about the US dollar. It cares about Bitcoin.
That's right.
So I love that. One Bitcoin is still one Bitcoin.
Yeah. Well, we love having you on the show, Big Beat. It's always an absolute treat. So thank you for joining us. And really quick, before we let you go, people are always looking for, guidance in this more and more uncertain world. And your account on X or Twitter is one of the best places to look. So tell us where our audience can go to check out what you're talking about next, because everybody wants that next big beat.
Yeah, you can find it's very simple. It's quasarmarkets.com, and on X, it's Quasar Markets. And if you want to hit me up, it's QM Big Beat on Twitter. And look, I tell people exactly what I'm thinking. I lay it out there for them. I don't hide it because the news is the news, the data is the data, and here's how that's how they're looking at it. So I appreciate that.
Well, that's what we love. It's all talk, no filler with you, Big Beat. So we love having you on. Thank you so much for joining us on this Monday morning to kick off the week. Enjoy the rest of your week, and we'll see you next week for more, my friend. Thanks for tuning in with us. Always great to have you.
Thanks for having me, Hank.
Cheers. All right, gang, we're taking a quick break here at Roxom TV News. When we come back, we're going to be starting our second hour of today's show. We will be discussing many things, including the latest peace efforts between Russia and Ukraine. Stay tuned. More Roxom TV News coming your way with our second hour right after this quick break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
It's time for our top story of the hour that's occurring in Abu Dhabi as diplomats from the U.S., Russia, and Ukraine will once again sit down to discuss a war that continues to reshape Europe and destabilize global politics. Now, the renewed talks are being presented as another attempt to narrow deep divisions over territory, security, and sovereignty nearly 4 years after Russia's full-scale invasion of the Ukraine began. Now, Ukrainian President Volodymyr Zelensky has confirmed that Kiev will participate, while the Kremlin says Moscow will send its delegation as well. But even before the meetings begin, officials on all sides are cautioning that expectations should remain extremely low. Moscow continues to demand control over large parts of eastern Ukraine, including regions it does not fully occupy. Kiev has rejected any permanent concessions and insists that full sovereignty must be restored. While diplomats prepare to talk, the war itself shows little sign of slowing down. Russian drones and missiles continue to strike civilian neighborhoods and energy infrastructure, and a recent attack killed miners traveling on a bus and left entire communities without heat, power, or water in winter conditions. Ukrainian authorities are also tightening controls on Starlink satellite terminals after discovering that Russian forces were using them to guide attacks. In Moscow, former President Dmitry Medvedev is trying to balance reassurance with warning. He says that Russia does not want a global conflict, while also arguing that international tensions are becoming more dangerous. He has praised Trump for reopening diplomatic channels and criticized Western governments for escalating pressure. Now, European diplomats say Moscow has long used the threat of escalation as a leverage in negotiations. Now, for those of you at home watching, this matters because this war continues to influence energy prices, defense spending, and global security alliances. And that's the hard reality facing these talks. The battlefield is still active, the political demands are still rigid, and neither side has shown real willingness to give up what it believes it needs to survive. So while the meetings keep the door to diplomacy technically open, they're not yet moving anyone closer to actual peace. Right now, they are about managing the war, not ending it. And in other news, worsening fuel shortages, long lines at gas stations, and rolling blackouts have become daily reminders of how vulnerable Cuba's economy has become. Now, those problems intensified after President Trump warned that the United States could effectively cut off the island's remaining access to oil through what he described as a virtual blockade. The threat was designed to increase pressure on Cuba's leadership by targeting one of its most critical weaknesses, energy supply. Only days later, Trump's tone shifted. He said the United States is now in direct talks with Cuba's leadership and suggested that a deal could be reached. He said negotiations were taking place with the highest people in Havana, although he offered few details about what those talks might involve. The shift came after a major escalation in economic pressure. Trump recently authorized new tariffs on countries that sell oil to Cuba and warned that suppliers could face U.S. penalties. The message was straightforward: agree to negotiate or face deeper shortages and economic pain. The effects were felt almost immediately. Fuel suppliers tightened further, transportation slowed, food distribution became more difficult, and Cuban officials accused Washington of deliberately strangling the economy and warned that further disruptions could trigger a humanitarian crisis. Cuba is especially exposed right now because support from Venezuela has weakened. With Nicolas Maduro's government struggling, oil shipments have declined. That has left Havana more dependent than ever on limited outside suppliers. Trump's administration, supported by Secretary of State Marco Rubio, has framed economic pressure as a tool for forcing political change. Rubio, whose family fled Cuba, has long favored a tougher stance. For now, however, it remains unclear whether these talks represent genuine diplomatic progress or another round of brinksmanship. Cuba is negotiating under severe financial strain. Washington is using energy access as leverage. And for viewers at home, this should matter to you because U.S.-Cuba relations affect migration patterns, regional stability, and humanitarian conditions across the Caribbean. And this is the reality underneath the headlines. Cuba is not coming to the table from a position of strength. It is coming because its economy is running out of fuel, literally. And the United States is betting that pressure will produce concessions faster than diplomacy ever could. Now, whether that leads to reform, resentment, or another collapse in relations will depend on what happens next. But right now, this is less about reconciliation and more about who breaks first. Moving back to the United States, in a quiet Minneapolis area neighborhood this week, a 5-year-old boy finally walked back into his home after weeks of being held more than 1,000 miles away in federal custody. The child, Liam Canejo Ramos, had been detained along with his father during an immigration raid in a Minnesota suburb and then transferred to a detention facility in Dilley, Texas. Their return followed a federal judge's order demanding their immediate release. Congressman Joaquin Castro personally escorted Liam and his father home, sharing a photo of the boy wearing his backpack and favorite hat. School officials say Liam was one of 4 students detained during the operation, which immediately sparked anger and concern across the community. Court records show that Liam and his father had entered the United States legally as asylum applicants. In his ruling, U.S. District Judge Fred Byery strongly criticized the raid, calling it ill-conceived and poorly executed. He said the operation appeared driven by deportation quotas rather than careful judgment. He also argued that the use of administrative warrants issued by immigration officials violated constitutional protections. In one striking comparison, he described the system as the fox guarding the henhouse. Following the ruling, Democrats renewed calls for changes to ICE enforcement practices, and lawmakers are demanding wider use of body cameras, limits on roving patrols, and restrictions on agents wearing face coverings. Even some Republican mayors have expressed concern that aggressive raids are damaging trust between law enforcement and local communities. President Donald Trump says funding and oversight of the Department of Homeland Security remain under review as Congress negotiates a spending bill. Now, for Liam's family, the focus is now on emotional recovery after weeks of fear and uncertainty. And for policymakers, the case has become a symbol of how immigration enforcement decisions affect real families. And here is the larger reality that this story exposes. This was not a border crossing. This was not a violent suspect. This was a kindergarten student pulled into a system designed for criminals and national security threats. It happened because speed and quotas were prioritized over judgment and restraint, and it only ended because a judge stepped in. If that ruling hadn't come, Liam might still be sitting in a detention center hundreds of miles away from home. And that's why this case matters. Not as a political talking point, but as a reminder that immigration policy is not abstract. It lands in living rooms, classrooms, and childhoods. And every time enforcement forgets that, stories like this are guaranteed to repeat. And new demographic data suggests the United States may be approaching a turning point that would have been almost unthinkable just a generation ago. You see, for the first time in modern history, America could soon see its population begin to shrink. According to a new Bloomberg analysis, falling immigration, low birth rates, and an aging population are converging faster than expected. As a result, overall population decline could begin as early as this year. Census data shows that growth slowed to just 0.5% in the year before July of 2025. That was the weakest pace since the pandemic. Now, the main driver was a collapse in net migration, which fell to about 1.3 million from nearly double that the year before. And researchers now warn that net migration could turn negative in 2026. That would mean more people leaving the country than entering it. A joint study by the American Enterprise Institute and the Brookings Institution suggests the United States is already close to that threshold. And the Trump administration argues the crackdown is producing benefits. Officials say it is easing pressure on housing, wages, and public services. They insist there is no shortage of American workers to fill jobs. President Donald Trump has framed the trend as reverse migration and proof that his policies are working. Many economists, however, strongly disagree. They warn that population growth has long powered U.S. innovation, productivity, and tax revenue. With births barely exceeding deaths, immigration has become essential to sustaining the workforce. And if immigration remains low, labor shortages could worsen in healthcare, construction, and manufacturing. Social Security and Medicare could also face added strain. And some experts believe migration could rebound under future policy changes. Others fear prolonged restrictions could lock in years of stagnation. Now, for those of you at home, this should matter because demographic trends shape job markets, economic growth, and long-term prosperity. And how the U.S. handles immigration in the coming years may determine whether population decline becomes temporary or permanent. We're taking a quick break here at RoxomTV News, but when we're back, we're going to be joined by our special guest of the hour to break down more of today's top stories. So stay tuned. We'll return right after this quick break. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, welcome back to RoxomTV News. Right now, I want to bring in our second special guest of the day. She's a content creator in the crypto space, Melina, also known as the girl in the verse. Hope I'm saying that right. Melina, welcome to the show. Great to have you. Thanks for joining us this Monday. How are you?
Thank you for having me. Happy to be here. Yes, happy to be chatting all the things. Yes, I am the girl in the verse. I still kind of believe in this metaverse, but maybe not right now. We have so much to get into before talking about metaverse.
So that's where the name came from. This was originally the girl in the metaverse. Oh my goodness, that brings me back.
Listen, the story is my beloved husband now, but at the time was my boyfriend telling me, you got to get into this crypto stuff. And when I got into crypto, Mark Zuckerberg changed his company to Meta, right? So I was like, okay, maybe there's something here. And anyways, just wanted to be some girl in this space. And so that's how the name came about. And it stuck with everyone. So here we are.
All right, well, I'm excited, Melina. We got some stories to talk about, so I'm going to read this first one, and then you and I are going to jam about it. Sound good?
Yes, let's do it.
All right, let's do it. So over the past several trading sessions, financial markets around the world have been reacting to a sudden shift in expectations about U.S. monetary policy. What began as a sharp sell-off in commodities has now spilled into stocks, currencies, and other risk assets. The trigger was President Trump's decision to nominate Kevin Warsh as the Federal Reserve Chair. Investors view Warsh as a strong inflation hawk, which has reinforced expectations that interest rates may stay higher for longer. Now that shift has rippled quickly through markets. Gold fell as much as 5% in a single session. Silver dropped more than 7%. Oil slid nearly 5%. Copper and agricultural commodities also declined. And Friday's plunge marked gold's steepest one-day fall since 1983 and silver's largest daily drop on record. And as prices fell, the CME raised margin requirements on metal futures. That forced traders to put up more cash and accelerated the unwinding of leveraged positions. At the same time, the stronger dollar made commodities more expensive for overseas buyers, reducing demand. The turbulence soon reached equity markets as well. Stocks in Asia and Europe declined sharply. U.S. futures pointed lower. South Korea's Kospi dropped more than 5%. Bitcoin also struggled, extending its recent weakness as confidence in alternative assets continues to fade. Investors say the sell-off reflects a rapid reassessment of where interest rates are headed. Bets on aggressive rate cuts have been scaled back. Borrowing costs are expected to remain elevated, and some analysts see the downturn as a healthy correction after months of excess. Now, others warn that prolonged commodity weakness could hurt emerging markets and corporate earnings. For those of you at home, this should matter to you because market volatility affects retirement accounts, borrowing costs, and consumer confidence. It also shows how quickly global finance can react to leadership changes at the Federal Reserve. But the bigger takeaway is this. Markets are no longer trading on hopes of easy money. They are being forced to price in a world where borrowing stays expensive, speculation gets punished, and discipline matters again. That shift doesn't happen in a week. It reshapes portfolios, business decisions, and investment strategies for years. And until investors see clear signals that rates are coming down, volatility is not a phase, it's the new baseline. We're bringing Melina back. Melina, when people hear that gold, oil, stocks, and even crypto are all dropping at the same time, it can feel a little overwhelming. So from your perspective, what's the big picture story here that everyday investors should actually understand and be paying attention to? What's your beat on this?
So, I had a hard time with this one last week because I always thought, well, Bitcoin's different from gold and silver and everything else. And now it seems to all be crashing all together. But, I think having studied this over the weekend and seeing what people are talking about, I think that, Trump bringing in Warsh kind of set a different tone than I think what people were expecting, right? Trump was so mad at Jerome Powell, was begging him to cut the rates for so long, and then says, hey, I'm bringing in Kevin Warsh. But, I'm young. I don't remember 2008 that well, but when I studied Kevin Warsh, I said, wait a second, he's the complete opposite of what Trump actually wanted. So it almost feels weird. And what you were saying before, this hawkish thing, this is what people are calling him, a policy hawk. And, I think this idea here was that the feds would sell assets, which means, he would tank the markets lower. And, people are kind of bullish with him because they're saying, well, he loves Bitcoin. But at the end of the day, I'm looking at the balance sheet now, right? I don't think it's just about interest rates. I think we're looking at the balance sheet. Warsh has been, a vocal critic of the Fed's $6.6 trillion of bloated portfolio. And historically, yeah, he wants to do the opposite of what Trump has said he wanted the Fed to do, which is cut the rates. So I feel like this is either more manipulation, or we're expecting inflation to get way worse and need, a hawkish Fed. As for Bitcoin, listen, I want to remain positive when it comes to my Bitcoin. That's what I want to do right now. I'm seeing lows as maybe 60. I did tweet this morning. I'm going to save $60,000 right now so I can buy a full coin. And people are like, what do you mean? We're going down to $35,000. And I said, I don't see us going that low. I don't see us going that low for Bitcoin there. But yeah, that's right. That's what basically.
Yeah, no, you make some really interesting points because, we have heard Trump call Powell, too late Powell now for almost this whole year, even though he was the one who nominated him. And now we have Warsh, who seems more hawkish. It's only a matter of time before he becomes too late Warsh or something too. He'll think of some other clever nickname for him. But, a lot of the drawback or pullbacks we've seen in the markets this past couple of days seems to be tied to these expectations that interest rates may stay higher for longer than we anticipated. So my question for you, Melina, is how do you think that mindset changes the way people should think about saving, investing, or even taking on debt right now if we're seeing a potentially even more hawkish Fed going forward? Does that change your or other people's approaches, you think, of how they should be, going with risk right now in the market? How is it making you feel off the bat?
Yeah, I was kind of studying this weekend, and I kind of wanted to dumb it down a little. And I was kind of thinking of so the way I kind of figured it out in my head was I was calling it like the pawn shop effect, right? So Bitcoin and tech stocks dropped, and people were waiting on this Fed news. But what I noticed is that many big traders were borrowing money to buy gold, right? So when gold crashed, it's kind of like their banks called and said, hey, well, you're losing too much money. Now you got to pay us back right now. So to get the cash, it seems like traders had this, had a choice, which was, I have to sell my cool stuff, which is Bitcoin or even like the Apple stock, right? So even if those were sort of doing fine, and this was, what we call like a margin call. And I think it's why there was this fire in the gold market, which ended up basically scorching the crypto market on Friday too. So I think that's what was happening there. Now, what I suggest people, listen, I saw big banks like JP Morgan basically saying, don't panic. This is just a healthy flush, of the system. And they still think gold is going to hit record highs again. I don't know if I believe that, but they still believe that gold's going to hit record highs. I think we're looking at $6,500 by the end of the year. That would be like the bull case I have. Now, the bear case, I would say others are also warning that if Bitcoin stays below 80K, which is what we're seeing right now, the crypto winter might return. But then interesting enough, this morning, I was seeing, who was it? What was his name? I took some notes here. It was the Bitwise Asset Management Chief Investment Officer saying, and I thought this was interesting, and I want to repeat it because it's not my info, but he says, 2025 was the bear market. So he says we're in the bottoming phase of the bear market. I thought that was interesting because I've been waiting for Bitcoin, after it hit 120, I was waiting for it to come down a little, and I was like, okay, we're going to the 250, like we all hoped. So seeing that the Bitwise Asset Management Chief Investment Officer, so it's not nobody, saying actually 2025 was the bear market, has me rethinking my strategy right now.
Yeah. Was that Matt Hogan by chance, the Bitwise?
Yes, that's it. Yes.
Yeah, we've had him on the show. He's great, but he's also been a really big proponent of listen, the 4-year cycle is dead. Bitcoin's price, action now is more of a macro thing. And so that's not surprising to me that he would call this whole past year a bear market. He definitely is seeing these from a different view than I think a lot of people out there. And as you mentioned, with this most recent pullback, it seems like people are kind of falling into one of two camps. We got some analysts that are saying that, hey, this is a healthy reset after months of excess. And we got others who are saying they're worried that this could hurt earnings and emerging markets. So, Melina, where do you personally fall on that spectrum right now? What are you kind of gauging the temperature in the room as far as Bitcoin and crypto assets currently after this Warsh announcement? Does it leave you feeling optimistic and maybe a little bullish for the next year, or is it maybe making you temper your initial expectations for 2026 a little bit? Where do you land on that?
I mean, this weekend was a sad weekend. I'm not going to lie to you. I was
Yeah.
expecting more for this year. I think, like a lot of people, I think in November, December, when people were lining up to buy gold and silver and DMing me like, hey, I'm going to go line up. And I was like, these people are crazy. Like, this is the top. And so I was even shocked to see gold and silver do what it did in the new year. I'm still bullish. I think I need to be bullish because I'm here for the long term, obviously. This is never financial advice, but I didn't sell it at 120 because I'm hoping it goes higher. And I think that's always like the meme, right? Like we're always like, well, I'm waiting in line. I'm going to remain bullish for the most part. I am, though, cautious because it almost feels like now everyone's just waiting for something to happen. And so as we're waiting, I just feel like this is where the slippery slope comes in. I would have liked to see better for Bitcoin right now. I would have liked to, convince more of my friends to stop lining up and buy gold and go get the actual Bitcoin. But that's not what's happening right now. And it's even harder for me right now because a lot of retail are just jumping on precious metals right now. It seems like that's all they care about right now. And so I'm hoping that eventually we'll change that tide, but not right now.
Yeah, Melina, you said the word you're waiting, and I feel like that's you're echoing a sentiment from a lot of people in the crypto and Bitcoin space right now. Because while this past year seemingly was great for Bitcoin, we've got institutional tailwinds that we've never seen before. Even the United States government seems pro-Bitcoin. Yet the price hasn't reflected that the way many of us thought that it would. So as we start into 2026 here, what do you think would be the catalyst that you're looking for that might indicate things are back on the upswing? Would it be some news from the government? Would it be more institutional buying? Maybe retail finally gets a little more active? What are you kind of looking for in 2026 to signal to you that the bull market is back on and in full effect?
I think for a long time, I've been asking for regulation. I mean, we've seen ETFs come in. We've seen big institutions buy Bitcoin and crypto right now, right? We see all these big ETFs, appearing. And that also didn't really move the needle. It did a little last year, but still not enough. So I think at this point, I'm hoping for regulation this year. I hope with this government, I mean, let's face it, Trump is pro-crypto. So I'm hoping that this will set the tone for this year because we finally have a government who's pro-crypto. So I think at this point, that's what I'm waiting on because we have the ETFs, we have the companies buying Bitcoin. It's now easier than ever. I think more and more people hear the terms Bitcoin, Ethereum, right? They hear it, in their ETFs and whatnot, and it's still not moving the needle. So I'm hoping with clear regulation, then institutions feel more comfortable, and then retail. We don't have to convince them anymore. I hope that retail just decides, okay, we have clarity, now we'll start buying.
Yeah, I think for me, retail is really the crux of this because with retail getting on board, as we saw back during the COVID times, there's this sentiment, right? And with good sentiment comes the TikTok and the YouTube videos, and then the influencers start coming on. Then we're really in the throes of the bull market. But I do think in this past year, we kind of suffered from something that I don't think we intended or we thought would have this effect on a lot of the community, which is unit bias. I do think there's something to be said that a lot of people saw Bitcoin get to six figures and thought, well, I'm out. Like, I can't get in this. It's too expensive for me. So part of me kind of wonders that if we keep seeing Bitcoin sink down and maybe get closer to that 50K arena, and then maybe there's a violent uptick where it goes up 10 grand in a day or something, could that be something that acts as a bit of a catalyst for people to start paying? Oh, look, Bitcoin's going back up and it's not as expensive anymore. So I think it could come from a place we don't necessarily expect it, but that's kind of how Bitcoin always works, right? It always does the opposite of what you would have intended. This was the best year seemingly and for Bitcoin in terms of regulation and adoption. It went nowhere compared to what we thought. So I think we could be in for a good surprise sooner than later. However, we do have to take the current climate into account. So for Melina, for people that are watching at home right now that are thinking about their retirement accounts or their mortgages or their next big investment or purchase, what do you think is maybe the smartest way to mentally and financially navigate the kind of volatility we're seeing right now? Is this kind of a wait on the sideline and just wait till you get more information approach? Or do you think people should be maybe testing the waters right now to getting in at maybe a lower price? How are you kind of playing this volatile market that we're seeing right now?
So I would definitely test the market. I mean, one thing I learned over the last like 6, 7 years that I've been in this space is, like I said earlier, when everyone was lining up to buy gold and silver, I thought to myself, well, that's the top, right? Like we kind of have to start doing the opposite of what people are doing. And so obviously for a lot of people, they were like, ha ha ha, you were wrong. But they still didn't make those gains the way, when you compare buying Bitcoin now to what its potential could be. And I think at this point, I would say start DCAing into Bitcoin, DCAing into, obviously you got to do your homework, figure out which cryptos work for you. But I still feel like going into gold and silver and even copper right now is like chasing. And so I want to avoid, I want to avoid chasing. I want to be a bit more prepared. And right now, for me anyway, because I was waiting for the 250K, I'm kind of sitting. I'm sitting right now because I've been sitting since 2025. And so I've had no choice but to just sit on my hands and not make drastic moves over the weekend. I think the last thing you want to be doing is when everyone's panicking is like selling. I think right now just sit. But for those of you who are just starting and just learning about this, get comfortable, right? Dollar cost average, see what you're comfortable investing in. But I would definitely steer away from all this noise around precious metals.
Yeah, no, I agree with you. I think sitting and waiting, especially if you already have skin in the game right now, would seemingly be the most appropriate move. Of course, continue to DCA whatever you're comfortable with, but I think any kind of panic selling right now is usually the type of thing that bites you in the butt when you look 2 months later and the price has jumped like 20K or something. We've seen it before, and I certainly don't want to be the cautionary tale again, because I have been in the past. All right, we're going to move on to our next story, which is we want to rehash a little bit more about this Kevin Warsh situation. So stay tuned, Melina. We're going to be back with you in a second as we enter into what we're calling our Bitcoin story of the hour. Bitcoin's price currently is sitting around 78K this morning after seeing it go as low as 74K. So we've seen some changes in the last couple of days here. Now, following that sharp weekend sell-off that we saw that ripped through global markets, Bitcoin has slid around to 74,000, falling nearly 13% in 4 days as thin weekend liquidity, technical breakdowns, and shifting expectations around Kevin Warsh's Fed nomination combined to trigger heavy selling. The drop was driven less by everyday investors and more by forced liquidations and institutional de-risking, with nearly $600 million in leverage bets wiped out in 1 day and more than $800 million flowing out of U.S. spot Bitcoin ETFs. Now, with over 22% of Bitcoin supply now sitting at a loss, conditions are in place for potential relief rallies, but also for continued resistance until demand clearly returns, making ETF flows and easing liquidation pressure the key signals to watch in the weeks ahead. So we're bringing Melina back. Melina, this drop, and we talked about it a little bit in the last story, was driven a lot by liquidations and ETF outflows rather than everyday people panic selling like I have been guilty of in the past. So my question to you is, how important is it to understand who's actually doing the selling in moments like this? Is that a big deal? Does it matter to you if it's the institutions or retail selling? What are your thoughts on that?
I mean, I do look at it. I think everyone right now is just panicked because, again, it just seems like everyone is crashing. Everything is crashing. The whole world is burning, really. I do look if it's institutions, but like I don't want to look at Michael Saylor, but I'm even like he bought more Bitcoin today, so I'm also like, okay, I think we're in a good area here if Michael Saylor is still buying Bitcoin. But yeah, I would look at institutions if they're selling, but I am noticing that it's mostly traders that are selling. And at the you mentioned before, people want to see the 100K. I'm also worried that once we get to 100K, a lot of people will sell their Bitcoin. So I'm kind of like, I'm in the middle here of like seeing, is it the traders? Is it institutions? But at the end of the day, I think it's very geopolitical right now. I think it's people are just really unsure about what's going on. Yeah.
Yeah, no, absolutely. A lot of confusion in the market right now. And you mentioned Michael Saylor. So I'd be curious, Melina, from your point of view as an investor, a solo investor, a trader, when you hear Michael Saylor comes out on his soapbox and says, we just bought more Bitcoin again. And we've heard this story dozens of times now. Does that really embolden you in terms of your convictions with Bitcoin at all as an individual investor? Or at this point, is that just hearing Michael Saylor do what Michael Saylor does? Does that have any real effect on you as a trader or an investor?
I mean, it does in a way. I do have my concerns with him buying up all the Bitcoin. I feel like I would love for us to share the Bitcoin. I would love for us to share it. So there are weeks where I'm like, damn, he just bought another 1 point. I'm never going to get to this. But what I do appreciate about someone like Michael Saylor is that he's all in on this. And so when I see someone of his stature, of what he's doing, and literally at this point, really to the dollar, looking like the Bitcoin chart at this point with MicroStrategy, it makes me bullish to see that he's still buying Bitcoin, even on red days like today. So it doesn't really affect me in the sense of like, oh, well, here we go again. But I don't like the fact that he's the one guy buying all this Bitcoin. That's the part where I still I have like a love-hate with MicroStrategy right now. I think when we look at both charts, I still buy Bitcoin versus MicroStrategy. So that's another thing that I do, even though I appreciate what he does, I still rather go straight to Bitcoin than buy MicroStrategy.
Yeah. I will say his like continued conviction, at least as Joe Q and John Q investor, makes me think, well, maybe I am an idiot for buying Bitcoin, but if I'm an idiot for buying Bitcoin, at least this guy's the biggest idiot for buying Bitcoin. So it makes me feel a little better about my own financial decisions a little bit. And like, you got to have the biggest steward in the space ultimately always coming out and saying he will buy BTC. Now, it sounds like you've been in the space for a bit of time now. You said like 6 or 7 years. What advice would you give to investors that are just kind of stepping their foot into the orange waters right now? What would you tell them as we saw this big pullback? What would be your advice to them at this point in time? To just stay the course and not freak out? Maybe, diversify a little? What would be your words of wisdom to them, Melina?
Definitely diversify. I mean, I've been looking more into dividend stocks more than ever. I've been opening up my portfolio a lot more. I'm like understanding more about the stock market and what's going on there. And I think that's thanks to my journey in crypto. But what I would tell anyone right now, if you're watching us right now, you're in the right place. So if you're on RoxomTV, you're already in the right place. The second thing is definitely do your homework in the sense of don't take one person's advice. Go look. Go snoop around, go read stuff. And then, not to quote Nolan or anything, and Nolan, I'm such a big fan of Nolan, but don't look at only what the media is talking about. Go and dig deeper, go dive on X. There's a reason why Elon Musk bought X. And go follow people who are talking about this. I think people get really caught up in wanting to join these private Telegram group chats because they're hoping to make that quick 100x. I think now's the time to really get clear on what your focus is here, what you want to do, and have a long-term plan. I think a lot of people get into crypto because a long time ago was the get rich quick scheme. But I think we've come a long way now. A lot of people are wearing their suits, like you said, and so take your time and really, really only put in what you can afford to lose. I can't stress that enough. We've seen way too many people just come in, lose a lot of money, and then leave. And I think that's the last thing we want, right? When we talk about onboarding people, we want to make sure they're not only here, but that they stay here. And so, yeah, that's my piece of advice.
Yeah, I think that's fair advice. And it's kind of ironic, right? Because really the thing that gets so many people into the space, and I was guilty of it 10 years ago, was like, number go up quickly. And I was like, I'm here for it. But as you've been in the space for a while, you realize that it's actually the opposite. You just have to be patient and bide your time and don't rush things, which is the exact opposite of reason we all get into this often for the first place. So it's an interesting space. And we've got a lot more to talk about with regards to you today, Melina, as we're going to talk about your journey into Bitcoin in just a second. But first, we're going to take a quick break. But we'll be back with more of me, RoxomTV News, and Melina right after this. So stay tuned.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
plenty of spreadsheets, and my quant.
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
And we're back at Roxom's TV News. I'm catching up with our good friend Melina here. Melina, I want to get into your background a little bit. So let's start at the beginning. Before Bitcoin, before content creation, what were you doing, and what were you originally interested in before money and markets became a big part of your life? What were you up to?
Yeah, it's an interesting story. So I was a TV journalist here in Canada for about 15 years. Just trying to make my way to the top. So I would say it was just like focused on my career. And then COVID happened, and it was just a weird time to be a journalist, I think, in Canada, especially where I live. It was very rigid rules and very weird times. I remember even like I had this like pass to go outside because we had curfew after 9 p.m. But because I was a reporter, I was allowed to go out. It was a weird time. Almost felt like the war. I don't know, like weird times. And so I decided to leave for many, many different reasons. One of them being that, and it's very interesting because I think that's what kind of brought me into crypto, but also blockchain technology. I didn't realize that I gave my name and soul basically to the rights of a news organization, when you sign your contracts. And so in leaving, I was then able to start a podcast and do other things that, like, you're asking me, like, what do you like to do? And so I only learned that later on, because at the time, when you're a young reporter and you get signed on to a big company, you just say yes and you do it. But once COVID happened and people wanted to have podcasts and, have a different avenue or write blogs, and you just weren't able to because you're signed with the company. And so fast forward, like I was telling you earlier, my now husband, but then boyfriend, was telling me, you should do this crypto stuff. We're only guys here talking about crypto and it's boring.
Yeah.
And I was like, what's crypto? I'm not doing that. But I would say it was very interesting because my partner, very, very active, but wasn't in the Twitter streets. I think at the time when I joined, everyone was on Clubhouse, going on those kind of shows, and then everyone quickly switched off to X. But X at the time, I mean, I was a journalist, right? So only journalists and politicians had an X account. So it was like so weird to me.
Right.
But I quickly fell into that rabbit hole of like Gary Vaynerchuk begging people to get Ethereum and to buy his NFTs, and Mark Zuckerberg changing his company, investing billions of dollars into this metaverse. Roblox was also very popular. And so as a good reporter, I was doing a lot of research and, started telling myself, wait, this guy is probably not that dumb after all. And maybe this crypto stuff is something. And so, just dove into crypto. At the time, my partner was only telling me to buy Bitcoin. I was like, I got to buy this Ethereum stuff too, and the Solana stuff. And I had to, I wanted to try different things. And so I did mint NFTs, and I fell into this rabbit hole of NFTs and all these things. And my boyfriend was like, you're wasting your money. You're spending it like wrong. And so I would say like, all the roads led back to Bitcoin for me, which I think is such a beautiful story, because I had this guy in my house who's like, Bitcoin, 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 which today we would call a maxi. But I, in doing research and wanting to speak to people and jump on spaces on Twitter and really understand what people were talking about, I think it was such a beautiful story to like dive into Ethereum and buy NFTs and then jump into Solana and started trading and then, oh, wait a second, there's this Bitcoin stuff. And Bitcoin at the time was still considered like the grandfather coin, the daddy coin. People were, and so even now after, 7 years, I feel like Bitcoin's cool again. So it's fun to see that and to see my journey too. And because I would say now a lot of people will say, well, you only talk about Bitcoin because that's all I really talk about.
Yeah. It's the one good one. I think that's like a big, shift we've had in the last 5 years or so. There was Bitcoin and there was all the other ones. Like you said, there was Ethereum, there's Doge, there's XR, there's so many other ones. But after time and after all the trials and tribulations, we all come back to Bitcoin. And as I've had the opportunity to interview hundreds of Bitcoiners at this point, it seems like the evolution for them is all quite similar. And I'd be curious if your case was like this. It seems like people get into it, they don't fully understand it, and it takes them some time to kind of wrap their head around why Bitcoin is so important and what it means for the future. Was that kind of your experience too, where it took a lot of those testings to realize like, oh, it's really always been about Bitcoin the whole time? Was that your process?
It was why. And then the other element I want to bring in is that, and it took me a long time because at the very beginning, once I figured this out and I was like, oh my God, like, I got to tell my girlfriends. I got to tell my mom about this. But I entered this quick slope of I have to convince people. And so I became this convincer person and I was on my socials like, you got to buy this. Like, and so now when I look back, it was more that what I understood was that I get to own something that no one, it doesn't matter my gender, it doesn't matter where I live. And, like I said, I live in Canada and, for a lot of us in North America, we come from countries where we trust the government. But when you look outside of North America, right, and you go to, Argentina or now El Salvador, but just even you go to Mexico, right? It's still North America, but you go talk to people in the villages and you're like, hey, like this, you don't trust your government and there's this new asset and people get it right away. Whereas I feel like in North America, I'm still having to tell people, hey, listen, in Canada, we had the truckers that, that we froze their accounts. Like these are legitimate things that happen. And it's not to scare people, but it's just, I think we've reached, a time where we just gave full trust to whatever people were telling us, right? And I think now, even with what we're seeing now, and people will say they'll blame Trump or but I just think we're entering a time now where people have no choice but to start questioning what's really going on. And so that's what I would say. Like I think for me it was that I understood, hey, listen, I'm not only a girl, but I could buy this stuff and my boyfriend doesn't need to touch it, or these are my own keys, this is my own crypto, this is my own Bitcoin, he has his own, I have my own. That was revolutionary for me even 7 years ago. And then the other aspect is I am a girl, and a lot of women, when I go to brunch, like we don't talk about money the way men do, and so I keep trying to hone in on that too with the girls around me. I just want women to just be financially savvy, and it's not about making $1 million, but it's just about understanding that you can own things. And I think for a long time it was so super unattainable. We didn't understand that. But yeah, like I said, you go to these other countries and they already don't trust their government. So when you come in and talk about Bitcoin, it seems like it's an easier sell. Whereas I didn't find that so much in North America, but that's what it is for me now. And I think we're changing that now. I think we're seeing people understanding now that, wait a second, maybe my government's not in for me right now.
Yeah, no, you're right. And that's such an interesting point because we in the United States look at Bitcoin and experience Bitcoin and cryptos in a very different way than people in other countries do. Specifically, South America is the one that comes to mind. So it's like they already have these problems that we can just start seeing in our government are happening right now. We didn't experience massive inflation like they did in South America until COVID. And now we're starting to see the cracks of that and the prices of everything that we buy now is more expensive. So yeah, it really puts a different lens on it, and that's great that we have more stewards like yourself that are, especially on the women's side, as you mentioned, that women just don't talk about it the same way. So it's more important than ever that we have people like yourself help spreading the orange gospel, so to speak. Which kind of brings me, and you and I chatted about it very briefly, but I want to get more depth into about it, is your moniker, Girl in the Verse. So that was originally from the metaverse, and then you just ran with it? Or like, what was the origin story for that name exactly?
So, originally, like I was telling you, not a lot of women in crypto, even 7 years ago. I find there are more women now. So I don't want to, hone in on, there weren't a lot of women here. We got to get all the women here, So there weren't a lot of women here. And I remember being on Twitter and, I wanted to jump in on a space and ask a question. And it was, at the time, it was very, hey, bro, what do you want to say? And my name was Melina, right? And I'd be like, well, I'm not a bro, but okay, I'll jump in. But it was kind of like I was joking about it, but I quickly realized, well, maybe I got to make it obvious for men that I'm a girl. So it started with girl.
Yeah.
Girl, what? And so, like I'm telling you, as I was doing my research and seeing, hey, listen, and Mark Zuckerberg's going to spend billions of dollars. And it was almost, at the same time, my thinking too at the time is, if Mark Zuckerberg's going to spend billions of dollars in a metaverse, Gary Vaynerchuk is preaching Ethereum, I don't want to miss the next Tesla. I don't want to miss the next Facebook. And so this came, at the time I was like, I got to figure this out. I got to study this. And so I went into this whole metaverse rat race, and I wanted to understand it more. I still believe in it in some sort of form. I don't know how that's going to be, but like, in a way, this is kind of like the metaverse. Like, we're digitally, speaking online. And so we'll see what happens there with the goggles and whatnot. But that's how that came about. And at the time, what I was doing is I was writing about things that I was studying. We have to go back and think that in crypto, we have our own language. Words like FOMO, words like HODL. And I was like, you have to put yourself in the shoes of someone who's starting out. They're like, what are they talking about? What's HODL? Like, what am I minting? What's a wallet? What's a cold wallet, a hot wallet? So I remember just writing things down in a journal. And the reason why I say this is because I've kept that journal, and I was writing, and I remember like just signing off like XOXO, like a bit like Gossip Girl. I know it's ridiculous, but that's sort of how it was. And it was like XOXO girl. And then it just came about in the verse. I don't remember how it came about, but all I remember is that was the era that I was in. And I think it still stands, because I don't know if I'd be the girl in the Bitcoin or because the journey was to Bitcoin. And I would say at this point, even crypto, I feel like is still a nasty word for a lot of people, So this is the name I came up with, and I've kept it because I think it still stands today. And hoping to get, obviously we want to get more women here, but not just to make it equal, but I think we bring a different perspective. And I think I just want to see more women owning up to the fact that they get to make and own assets that I don't think they even are aware about yet. So just excited to see what happens. And I have to say, it's been a really fun journey for me. And I wouldn't have been able to do this without all the crypto bros supporting me, It's been an incredible journey. So I'm just happy, I get to travel, been to the Bitcoin conference a couple of times now, did interviews there. And it's just been so much fun to connect. And I will say, what's fun about the crypto community is we all come from different walks of life, but we all kind of realize that we have this one goal together, and it's been so beautiful to see, over the years.
Yeah, Bitcoin is for everybody, and we're certainly glad we have stewards like yourself that are introducing more and more people out there, and in just a very peaceful, calm, and logical way, so people can understand it, because it is a lot to take in at first. And even in our show and our audience today, I'm sure we have some people that are still getting into the space themselves. And for those out there that are still making their way into their own Bitcoin journey, Melina, what's the best place I can send them so they can see what you're up to, whether it be on X, YouTube, or wherever you post your content? I want to send them to the right place so they can get on the way with their own journey.
Yeah, so I'm on YouTube, I'm on X. I was actually recently banned on TikTok, but we can talk about that another time. I'm coming back though. I actually just started a Rumble account too because of my issues with TikTok. But I'm everywhere at Girl in the Verse. So you can come find me there. My pinned video on Twitter is this funny parody I did. At the time, Binance was selling a women's perfume to get women onboarded into crypto, and I did a parody video.
Okay.
And just because I had so much fun, with that. I said, finally, something that's relatable to me, and that kind of blew me off. So, so if you guys want to go check that out, and it's pinned to my Twitter because people know me from that now when they see me in the streets.
Yeah.
But I did a lot of interviews in the past, and I am coming back now. I want to do more stuff like this. So hopefully I come back on Roxom and come back and chat with you in the near future.
Absolutely. We'd love to have you back on to Talk Shop. I think 2026 is going to be a really great year in the cryptoverse. So we're always excited to have as many educated and insightful minds on the program to jam with us as we can. So Melina, I want to thank you so much for your time today. It was such a pleasure meeting you and getting to learn more about what you're up to in the crypto space. Keep up God's work, and we'll be sure to have you back real soon.
Thank you so much. Take care.
You too. Thank you so much. Cheers. All right, gang, that's a wrap for today's Monday edition here at Roxom TV News. Remember, we're going to be back the rest of the week, Tuesday through Friday, but at our normal time of 8 a.m. Pacific to 10 a.m. Pacific. We're only from 10 to 12 on Mondays. And if you haven't already, please do me the thing. Make sure to like, follow, and subscribe to Roxom TV, Roxom TV News, and me at Hank at Roxom TV, wherever you choose to do your scrolling. And we will be back tomorrow again at our 8 a.m. Pacific time slot right here at Roxom TV for more of the day's biggest stories. So thanks for tuning in, and we will see you boys and girls Tuesday with more of the same. Until then, stay safe, stay informed, and always hodl on. See you boys and girls tomorrow.